Deciding when to take Social Security is one of those questions that a lot of people have, and you're not alone if you're trying to figure out how to maximize that. When we do our planning, we call it your financial pathway. And your financial pathway is unique, it's individual to you, because when we get into retirement, you're normally not worried about what accounts do you have, which one are you spending down first. You're more worried about when can I go out and spend more time with the kids? When can I spend more time with the grandkids? How can I actually go forward and enjoy more time golfing or cruising? That's all the things that people want to do. What do you not want to do? Probably worry about inflation and if you have enough money saved. It's kind of looked like this for the year so far. Girl Scout cookies, I think I paid $6 for a box and it had 6 cookies in it. But this is the kind of stuff that happens that if not planned for, it can greatly affect your future. Social Security is going to fit into part of the puzzle that really helps you out with unlocking your future. And we look at that as far as keys to unlock your financial reality. So the first thing that we always want to make sure that we have is a spending plan. That's letting you know, where is your money going? What is a spending plan not? It's not a budget. A budget to me is like a 4-letter word. In my household, do you really want to look back in the rearview mirror at what happened and get an argument over that? Or do you want to start looking forward and to decide where do you want your money to go? A spending plan is going to let you be proactive. You can start planning in things that are going to be there for you for the future. And you can start making decisions of how do you want to shape that. If you find that you really like to travel and enjoy your time abroad, then make sure that you're building that in as far as part of the plan. But if we look at this and we say, hey, I notice that I'm losing a lot of money unknowingly and unnecessarily just in the way that I'm conducting myself. I spend a lot of money eating out. Maybe you change that and make some decisions to otherwise choose where that money's going differently. We also find that when we enter into retirement, there's a shift. You've now moved from saving that money and putting it away and building your pile of wealth to now you're going to have to start pulling from it. So this is when we find that it's important to have a detailed income plan. This is letting you know, where will my retirement paycheck come from? Will the money actually last? So this should be designed, if you're working with a financial advisor, when we do this, we actually go through and we lay it out so that we can see which account are we pulling from. How is that going to affect us when it comes to taxes? When should we cut on pensions? This is also going to help you out with Social Security as far as determining when do you need to have this cut on. Not just when it's going to be the most that you can get, but when do you need this so that you can stop spending your own money as quickly as possible. So those are important decisions that come up in retirement. When to cut on Social Security? When do I cut on a pension? Should I choose that pension to be for just my life? Or if I have a spouse, should it be for both of our lives? And all those should be questions that you're able to have answered when it comes to your individual situation. Well, let's look at Social Security just a little bit further with that. Social Security was signed into force by FDR in 1935, but it didn't actually take effect until 1940 for that first check going out, and it was for a whopping $22.54. And the good news back then, there was no strategy as far as when to take it. There was only one choice. It was age 65 when you could start taking that. Well, if we fast forward a little bit from trying to figure out why would 65 be important for the date, the average life expectancy at that point in time was 62 years old. If you've got over half of the population that had already died before they could even take Social Security, there wasn't a whole lot of people drawing from it. Lots of people working, very few pulling from it. So that allowed this to move along. We had a few changes that have happened along the way. They added in the fact that you could have early retirement in 1961. They deemed that at age 62, you could retire early, and that still is the case today. In 1983 was the first time it was voted and approved to actually tax Social Security. So not only do you have withholdings that create the ability for you to have Social Security, this is one of the things that gets people a little bit irked, is that up to 50% at that point in time could be taxed. It got worse though. 1993, it was voted and approved that up to 85% under Bill Clinton could be taxed. That has not changed. So now when we're doing that planning and we're looking at your Social Security picture, we have to be aware of what are the different income sources that I have coming in and how will that affect me from a tax perspective, not only in the tax that I'm paying, but also how much of my Social Security income can be taxed. Well, let's look and see a little bit as far as when we can file. That was one of those things that we just said. Originally, there was only one date, then they enacted where we could file early. So the minimum age that you can file is age 62, and you would receive 75% of your eligible benefit. If you wait until your full retirement age, or FRA, as you commonly see this, you're going to receive 100% of that benefit. And if you're able to wait all the way until age 70, you get 132%. That sounds great. You look at that and you go, Andy, this makes sense. Why would I not just wait until 70? I get the most benefit I possibly can. The simple answer is your life is going to be different than what will work out to be the maximum with that over Social Security. You might find that you want to retire sooner. Maybe you're eligible to retire at 60. I was speaking to someone the other day that she wants to retire at 53 years old. This is different for everyone. So we want to make sure that your spin down plan is unique to you. As you move along, things keep getting more expensive. Social Security knows that. So because of that, they have a cost of living increase. Every year they look at this to see if they are going to increase it. On average, over the last 20 years, there's been a cost of living increase of 2.15%. But in 2023, it was a whopping 8.7%. If you're watching this right now, you know it's because inflation has really stepped up. We're seeing that a lot more as far as things that went up quickly for the cost of those goods. So the adjustment has been made. Average benefit for a married couple, $2,972 per month, and for a single individual, $1,827. If your household is moving forward, you've paid into this system over time. If this was your only savings, if you saved nothing else, that's what you have to work on average to pay all of your bills. So you hear people say, I'm on a fixed income. I'm just not sure if I can make it work. This is one of those things that we want to make sure of, that this is not your only savings for retirement. If this is a majority of your retirement and you do have some other savings, we want to make sure that we're using those and protecting them in the best way possible. The maximum benefit that you can get with Social Security at full retirement age is going to be $3,627. How do I know there's a maximum? Well, it's because it cuts off how much they're withholding from your earnings based upon how much you make. So if you're still working, this often comes up that people are worried about, hey, if I'm taking Social Security, I've heard that they reduce how much I'll get depending upon how much I earn. If you're under the age of full retirement, you can earn, as of 2023, up to $21,240. And for every $2 you make over that, they're going to withhold $1. So you could very easily, if you're working still under the age of full retirement and you file for Social Security, it could be reduced to you actually receiving nothing. In the year that you're going to reach your full retirement, so let's say that you reach that in July of this year, you could earn up to $56,520. And then for every $3 over the limit, they're going to withhold $1. But once you reach the magical age of full retirement, there is no limit. You're not going to receive a reduction of your benefit. You're able to receive not only your income, but also your Social Security unreduced. So this is a way that you can continue to receive that benefit, even if you're still working. If we look at changes that have happened that can affect this, there was a big push in 2015 that voted and changed the way that Social Security works. Prior to this, there was a lot of strategy around Social Security that people were trying to figure out, should I take advantage of things like file and suspend or do a restricted application? But this was voted on in the middle of the night by both parties, neither one to blame with that, both of them to blame. And this in the middle of the night did away with all of those things. Congress deemed it was loopholes, and that's why they got rid of them. For many people, this eliminated the strategy to where now, what is the strategy? The strategy is, when do I take it? Why does that matter? When do you take it? Well, you can see the difference here of your benefit over your lifetime for a couple. The difference in filing at 62 versus 70 could be a $500,000 decision. Which one do I take? Would I tell you that you're wrong for taking it at 62? Absolutely not. Your plan, and when you actually do the strategy around this, might show that that is actually the best time. Other people look at this and they say, how long do I think I'm going to live? If I think that I'm going to live past the age of 80, that winds up being the break-even point of you choosing between 62 and 70. If you were to live past the age of 80, that taking it at 70 is going to put more money in your pocket. But until then, you might come out ahead taking it earlier. This is another thing that you may have heard of, is that people say Social Security fund is going to run out of money. So right now, if you look at your Social Security statements, either online on ssa.gov, or if you still get a paper statement in the mail, you're going to see that it's printed on there and it says, this is your benefit, but in the year 2033, we're going to only be able to fulfill 80% of this payment. So do I really think that you're going to wind up getting your Social Security payment cut in 10 years from now? So it's 2023 as I record this. 2033, do I think you're going to get a reduction in benefit? Probably not. Could you imagine being the person in office at that point in time that gets to hang their hat on the fact that they reduced your Social Security? Absolutely not. I don't see that happening. What will happen, in my opinion, is you're going to see changes of what is full retirement age, or maybe even adjustments of how much of your benefit you receive based upon how much you earn. That's already occurring right now in a thing called IRMA. The government's graded acronyms with this: income related monthly adjustment amount. And this is going to be adjusted from your modified adjusted gross income from 2 years ago. And that affects how much you're going to pay for your Medicare Part B. So B like boy, and Part D like dog or drugs. So Part B and Part D can be affected by what your income is from 2 years prior. This is a way right now today that it can reduce how much you receive of your Social Security check. So could they possibly extend this to go further with that? Very, very easily. It could very easily happen that we see changes with this. So for your Social Security, we want to look at, just a reminder, we want to look at all the pieces that are going to flow in with this to make decisions. We want to look at your spending plan. Where's your money going right now today? So if we look at all your different income sources that you have eligible today versus what you're spending, this can easily be found by looking at your monthly bank statements or credit card statements, wherever you're spending money. And there's actually apps that you can download on your phone or computer that will help you track this together so you can get a nice back picture. If we find that you're spending $3,500 a month and you're doing all the things that you want to do, it's probably fair to say that in retirement, you will want to maintain that lifestyle or maybe even increase it. A myth is that you're going to spend 80% less in retirement than you do in your earning years. And I've got to ask, what 20% are you giving up? For most people, they're not willing to give up any, because now every day's a Saturday. You can do all the things that you've wanted to do and have dreamed about doing while you're working, because now every day is that Saturday where you can have fun, you can enjoy yourself, and you can spend more money. That detailed income plan should show us what accounts are we pulling from, when, and how it's going to affect us from taxation as well as our money lasting. And lastly, if you have not already done a Social Security analysis, you can take advantage by clicking below to schedule a time that we can go through and do a Social Security analysis for you and your spouse if you're married, to find out when is the best time to take Social Security. So take advantage below that you can click that link so that we can take you through and we can do that Social Security analysis for you. If you want to find out about the other two items that we see that greatly affect your retirement future, then go ahead and click so that you can view the next video, or stay tuned in your email tomorrow to receive that.